I think we're good to go ahead and get started as everybody continues to filter in. Want to start by saying good afternoon to everyone. Welcome to our webinar on navigating the opportunity of multi-state compliance. My name is Kevin Miner, and I'll be guiding you through today's session. Before we dive in, a few quick housekeeping items. The webinar is being recorded, and you'll receive a copy afterward. Today's presentation is eligible for continuing education credit through Earmark. I'll go over how to get your CE credit at the end of the presentation. And we'll be together for approximately 45 minutes today, and we'll have some time for a Q&A at the end. With that being said, let's go ahead and get started. A little bit about Harbor Compliance. Harbor Compliance is a nationwide provider of registered agent, business registration, licensing services, and software. We also provide extensive nonprofit formation and fundraising compliance solutions to nonprofit organizations through Labyrinth, which is our nonprofit brand. Compliance isn't just a box to check, it's a fundamental requirement. Organizations must follow state uh, and federal regulations to operate. The real challenge is deciding how to meet these requirements in the most effective way. Here's what we'll be covering today. First, we'll discuss what it takes to form a new business and the necessary steps to take as your business grows. Next, we'll discuss the ongoing requirements to keep your business in good standing. Finally, we'll share why outsourcing compliance can free up resources and support growth. So let's dig into the required steps when forming a new entity. When forming a new business, one of the first steps is choosing the right entity type. An LLC or limited liability company is very popular with small businesses because it offers liability protection with a simple structure and pass through taxation. A C corporation is the classic choice for companies planning to raise significant outside investment or even go public, though it does involve a corporate taxation. An S corporation provides pass through taxation and avoids double taxation, but it comes with restrictions such as a cap on the number of shareholders and ownership limited to US individuals. For organizations serving the public good, a nonprofit is often the right fit. These entities can apply for tax exempt status with the IRS. And finally, professional entities like professional corporations or PLLCs are reserved for licensed professionals such as attorneys, doctors, and architects, and it offers liability protection while meeting state licensing rules. Keep in mind, this is general information only. Each type of entity comes with unique tax and legal considerations, so it's important to consult with qualified advisors before making a decision. When choosing where to form a new entity, there are several options to consider. For example, Delaware is popular with startups because of its investor friendly corporate law and specialized court of chancery. Nevada stands out for its lack of state corporate income tax and strong privacy protections. Texas offers a large and growing economy with a strong workforce, making it attractive for companies planning to hire locally. Finally, for many business owners, forming in their home state is often the most practical choice since it avoids additional costs of foreign qualification and directly matches where the business is already operating. These examples are for general education purposes only. Each business has unique needs, so it's important to consult with qualified legal or tax professionals before making a decision. Every business entity is required to maintain a registered agent in the state where it is formed, and in any state where it is qualified to do business. The registered agent's job is to receive official documents like lawsuits and state notices. You can technically appoint yourself or an employee, but that comes with risks. The agent must be available at the listed address during all business hours. Missing delivery could result in penalties or even default judgments. There are also privacy considerations. The registered agent's address is public record, so many owners prefer to use a service provider rather than their home address. Using a commercial registered agent service ensures reliability and continuity. Finally, if you're planning to operate in multiple states, a commercial registered agent service like Harbor Compliance can simplify operations by providing consistent coverage across all 50 states. This saves time, reduces complexity, and ensures you never miss a critical document. As your business grows, you may need to operate in multiple states. Foreign qualification is required when you're considered to be doing business in another state. This often includes having an office, employees, or entering into contracts in that jurisdiction. One of the biggest surprises for new business owners is how much complexity varies from state to state. Filing timelines, for example, can range from just a few days in Delaware to several weeks in states like California or New York. This affects how soon your company can officially operate. Filing fees also differ widely. Some states charge less than $100, while others charge several hundred, which adds up quickly if you're forming in multiple states. And beyond the basics, some states have additional requirements. For instance, a few require general business licenses, initial reports, or even the publication of formation notices in a local newspaper. Tax requirements also vary. Texas has a franchise tax, while Nevada doesn't levy a corporate income tax at all. Finally, don't forget that simply having employees in another state can trigger additional filings, such as registering with the Secretary of State and setting up payroll tax accounts. Doing business across state lines can also trigger not only foreign qualification, but also sales tax registrations. This is why businesses expanding across state lines need to plan ahead and anticipate these differences. South Dakota versus Wayfair Inc. Was a decision that was a game changer for sales tax obligations. While it might have, under normal circumstances, while it may not have received as much attention as it might have under normal circumstances, given its timing shortly before the COVID-19 pandemic, its impact has been profound. That said, ignorance of this decision isn't a defense, and the enforcement is real. Businesses now face obligations in state where they may have no physical presence, requiring proactive attention to avoid penalties. Let's do a quick check. How would you describe your sales tax registration process? Are you fully registered in every state where you need to be? Are you still figuring things out? Or are you not sure where to start? Drop your answer in the chat, and we'd love to hear where you're at. Now let's talk about the impact of remote work on regulatory requirements. As many organizations shift to long term or permanent remote work arrangements, their regulatory footprint is expanding. While some companies are returning to in person operations, for many, remote work is here to stay. This means businesses must now register to operate in additional states where their employees are located, manage tax obligations, and ensure that they have the right licenses in place. Just like in your home state, your business now has ongoing obligations in every additional state where it's operating. These include maintaining a registered agent, filing annual reports, paying franchise taxes, and renewing business licenses. For registered agent requirements, every state where you do business requires that you designate a current registered agent to receive legal notices and services of process. If the agent's information changes, that must also be updated with the state. Using a single service provider like Harbor Compliance can greatly simplify this process by consolidating all of your registered agent needs into one annual invoice. Then there's the annual report. Nearly every state requires entities to file some form of annual or periodic report. Because deadlines and filing schedules vary by state, some are annual, some are biennial, and even as long as every 10 years in states like Pennsylvania. Multi state businesses must stay on top of filings throughout the year. Many states also impose a franchise tax to maintain corporate good standing. States like California, New York, and Texas are well known for these requirements. These filings are separate from income tax and must be tracked and paid on time. On top of that, most business licenses must be renewed to remain valid. These renewals can be annual, biennial, or follow another timeline altogether. Regardless of the schedule, organizations need a reliable system to track deadlines and ensure updates are filed on time. Managing all of this across multiple states isn't a one time task, it's ongoing and it's dynamic, and requirements change often. Statutes, forms, agency websites, and even which agencies handle which tasks can vary. If your organization handles its own state registrations, chances are you'll eventually run into one of these changes, resulting in rejected filings, lost time, and overall added administrative work. That's why outsourcing these tasks to a trusted provider that stays on top of regulatory changes can be a smart and efficient solution. And finally, don't forget your organization is evolving too. Internal changes often trigger registration updates. Whether you're creating a new entity, undergoing a merger, rebranding, appointing new leadership, or expanding into a new state, each change requires updates across Secretary of State records, tax departments, and licensing agencies. That's why it's so important to have a process or partner in place to handle multi state regulatory requirements as your organization grows and changes. Now, for a poll question, and we will make it live right now. The poll question is: how many of you are managing registrations and licenses across multiple states? There's several options here, actually. Looks like hmm, some are managing themselves, others have an employee that manages. Give it a few more seconds here for some more answers to trickle in. So it looks like about half of you that responded are managing these requirements yourself, with others that have an employee or a team managing these requirements, and some with a registered agent uh, that assists. Appreciate everybody's response, and we will go ahead and move forward. So let's take a look at a routine process for a multi-state business. This process is hiring an employee in a new jurisdiction for the first time. Hiring a new employee might sound straightforward, but ensuring they can be paid requires opening payroll tax accounts in their jurisdiction. This process often lands on human resources, but it's really a tax compliance task. HR teams find themselves in the middle, coordinating with payroll providers, accounting, and finance, and sometimes external accounting firms. Relying on a compliance partner like Harbor Compliance with experience opening payroll tax accounts in every state can make this process smoother. Firsthand knowledge of the process allows them to navigate jurisdiction specific requirements, minimize delays, and significantly reduce the risk of mistakes. And the right partner will handle the heavy lifting, so all your team needs to do is provide the new account numbers to your payroll provider. With a proactive compliance management approach, you can eliminate confusion, streamline this process, and reduce friction, keeping the hiring process moving smoothly. A quick question for everyone. Have you set up payroll in a new jurisdiction for the first time in the last 12 months? Drop a quick yes or no in the chat. We'd love to see where everyone stands on this. Payroll tax registration doesn't exist in isolation. It often requires foreign qualification, which means registering your business with the new state's Secretary of State. This process allows your business to legally operate in another state. It also involves appointing a registered agent to handle official communications and compliant documentation within that state. Using a nationwide registered agent provider like Harbor Compliance simplifies the process significantly. We can serve as your registered agent across all states and handle entity filing seamlessly. While routine, foreign qualifications can still add complexity and ongoing obligations like annual report filings, which we can also offload for you. Eh, And since we have experience with these processes in every state, it allows you to take a proactive approach and anticipate these needs up front. This helps you avoid scrambling between HR, accounting, and legal teams and ensures your requirements are met without disrupting your business. When foreign qualification is completed, businesses often discover that obtaining licenses is the next big hurdle. Whether you're in a regulated industry or not, many states require general business licenses for all entities. Legal teams, sometimes with help from outside counsel, are typically involved in this process, but it's another layer of complexity. With a proactive compliance partner like Harbor Compliance that can help you see these challenges coming, you can integrate licensing into your workflow, saving time and reducing stress. Finally, once tax accounts, entity registration, and licenses are sorted, corporate records must be updated. This often requires legal and executive involvement as they are the teams typically responsible for managing organizational records. You might be wondering how hiring an employee could trigger updates to your corporate records. Under the Corporate Transparency Act, businesses must keep their corporate details up to date with FinCEN through BOI reporting. If a business foreign qualifies in a new state and their name is unavailable, they may need to use a forced assumed name. While this doesn't happen every time, such naming changes can require an updated BOI report. Failing to report these changes promptly can result in costly penalties. In summary, even basic operations like hiring an employee in a new jurisdiction can quickly snowball and require inputs from across the business. By partnering with the right compliance vendor that can assist you across entity, records, licensing, and tax, you stay ahead of these requirements, reduce stress, and avoid last minute surprises. With the rise of remote work, expanded sales tax obligations, and consolidation activity, it's clear that nearly every organization across state lines operates across state lines today. Managing regulatory complexity has become a universal challenge that requires a strategic approach. It also means fewer and fewer businesses are able to achieve and maintain comprehensive compliance, meaning those that do are truly differentiated versus the competition. Now, for another poll question, go ahead and launch it here. Out of state registrations. What is your status with relation to registering out of state? Have you never registered out of state and don't plan to? You've registered out of state in the past, but footprint isn't likely to change again soon, or you'll need to foreign qualify in a new state in the next 6 months. So it looks like quite a few plan on foreign qualifying sometime in the next 6 months. Give it a few minutes here for everybody to answer. Great. Appreciate everybody providing the answers. It looks like over half are looking to foreign qualify in the next 6 months. It's good information. So next, on to renewals and ongoing requirements. Along with annual reports, many states require renewals for licenses, permits, and registered agent services. Staying on top of these requirements ensures your entity remains in good standing and avoids penalties. Next, we'll discuss the renewal process and ongoing requirements for your business to remain in good standing. Annual reports are one of the most consistent ongoing obligations for business entities. Depending on the state, they're due every year or every other year. These filings update basic business information like addresses, registered agent, and officer or ownership details. They also require filing fees, which vary widely, and deadlines, which differ by state. Some tie to your anniversary date, others use a set calendar date. Staying on top of annual reports is crucial because missing one can mean late fees, loss of good standing, or even administrative dissolution. Forming your entity is just the first step. In many cases, you'll also need business licenses and permits. General business licenses are common at both the state and local level. And certain professions like engineers, contractors, and healthcare providers require specialized licensing. Don't overlook sales tax permits either. If you don't have a physical presence, many states' economic nexus laws can still require registration. On top of that, cities and counties may require zoning permits or health inspections depending on your operations. Most licenses renew annually. Missing a renewal can result in penalties or even prevent your business from operating until reinstated, which makes careful tracking essential. While higher interest rates have slowed borrowing for some, mergers and acquisitions remains a dominant growth strategy in many sectors, and compliance plays a critical role in this process. Organizations in good standing have a significant advantage. They can acquire or be acquired without delays or complications. But compliance considerations don't stop there. Post deal steps like deciding which entities will survive, winding down subsub entities, and managing licenses and tax registrations are crucial for a smooth transition and long term success. Amendments are the formal way to update your entity's information with the state. Common examples include changing your business name, which also requires updates with the IRS, your bank, and licensing agencies. Address changes, especially for your registered agent, are critical to ensure you receive state notifications and legal documents. Changes in ownership or management often requires prompt updates to so state records remain accurate. If your business purpose changes, for instance, expanding from consulting to also selling products, some states or industries may require new licenses or permits. Finally, larger changes like mergers or converting from an LLC to a corporation must be documented with amendment filings. These updates keep your business records aligned with reality, which protects your good standing and avoids conflicts with regulators or business partners. Next, let's discuss the major macroeconomic trends driving regulatory complexity. Compliance is non negotiable. Organizations must follow laws and regulations or risk penalties, losing their right to operate and damaging their reputation. Effective compliance starts with understanding and managing four key areas: entity registration, record keeping, licensing, and tax obligations. Let's begin with business registration. This is usually the first step when entering a new state, most commonly as a foreign qualification, but in some cases it may involve forming a new legal entity depending on the organization's structure and goals. Registration occurs with the Secretary of State's office and grants the business legal permission to operate within that jurisdiction. It typically also reserves the entity's name in the state and grants access to the court system to bring or defend lawsuits. As part of this process, the business must designate a registered agent. This individual or company is responsible for receiving service of process and other time sensitive legal documents. While many organizations appoint registered agents on an as needed basis, this can lead to a patchwork of providers, increasing administrative complexity, costs, and the risk of miscommunications. A better approach is to consolidate your registered agent representation with a single provider who meets the requirements across all jurisdictions. Providers like Harbor Compliance are happy to streamline this for you. Next is tax registration. This involves opening the appropriate tax accounts needed to file returns and pay taxes. For employers, this often means withholding and, and unemployment tax accounts, while sellers may need sales tax permits. Tax registration becomes necessary when a business establishes nexus, a sufficient physical or economic connection to a state. What what is important to remember is that registering with departments of revenue and labor isn't automatic. It requires intentional action by the organization. And because tax forms can be complex, it's best to be proactive. For example, register before conducting taxable activities like hiring employees or making sales. Finally, there's business licensing. Obtaining the proper licenses allows an organization to operate legally in a specific location or industry. Licensing may be required at the state or local level and can apply to both the business and its individual employees. With over 150,000 licensing authorities across the United States, there's no universal process for obtaining a license. That's why organizations must take a proactive approach, identify what's required, apply early, and work with legal advisors or service providers as needed. Together, these four areas: entity registration, registered agent appointment, tax registration, and licensing form the foundation of good standing and ongoing regulatory success. Compliance requirements are rarely isolated, and addressing one often uncovers others. For instance, hiring an employee may require a state payroll tax ID, which in many states cannot be obtained without registering the legal entity with the Secretary of State. Similarly, applying for a license often demands proof of existing compliance, such as a Secretary of State registration, tax registration, and other filings, depending on factors like the entity's name, ownership structure, or industry. Many organizations initially focus on resolving the issue in front of them, unaware of the additional requirements that lie beneath the surface, much like the hidden mass of an iceberg. A disconnected approach can create inefficiencies and increase risk, highlighting the need for integrated compliance management. To stay in good standing, organizations must maintain all of their Secretary of State, tax, and licensing obligations and be prepared to develop or adopt a solution that supports these interconnected regulatory requirements. Let's take a moment to review some of the state level updates, starting with New Mexico. As of December 9th, New Mexico launched a new unified online filing system. All business transactions must now go through this new portal. With this launch, the legacy corporation and business services system has been fully discontinued and is no longer available. For those who had prepaid balances in the old system, refunds were issued to the name and address on file as those funds did not carry over to the new platform. There are also a few changes to available services. Correspondent filings are no longer accepted, and currently, expedited online filing options are unavailable in the new system. Moving on to Vermont. On December 16th, the Vermont Secretary of State also transitioned to a new online filing system. To use the new portal, users must create a new account if they haven't already done so on or after that date. These updates highlight the importance of staying on top of state system changes, especially as they impact how filings are submitted and processed. One more brief polling question. Where do you get your updates on these types of changes? Do you search Google, no proactive search, regular research, it looks like, for some industry publications? We'll give it a few more minutes here for the answers to trickle in. Interestingly enough, the two highest answers are 47% regular proactive research and 40% no proactive research. And then a few in between. Some use Google, some rely on their accountant. Appreciate everybody answering this question. On average, government red tape only increases over time. Another key trend is the increasing proliferation of regulatory reporting requirements. A prime example is the new beneficial ownership information reporting requirements brought about by the Corporate Transparency Act that took effect last year. These regulations mandate organizations to disclose their significant ownership details to enhance transparency and accountability. This adds another layer of complexity to an already challenging landscape, reinforcing the need for proactive management. As of March 21st, 2025, so about a year ago, FinCEN announced an interim final rule that domestic reporting companies, otherwise known as businesses formed in the United States, are no longer required to file these BOI reports. For now, only foreign operating companies are required to file, but FinCEN continues to emphasize the importance of BOI reporting. You can check out our latest blog or one of our latest blogs to learn more. Next up, we'll take a look at some of the drawbacks of taking a do it yourself approach. Let's admit it, managing government paperwork isn't exactly a passion project for most people. But here's the thing, we love it. Yes, we're those compliance nerds who get excited about filing deadlines and regulatory nuances, and we embrace it wholeheartedly. We know it's not for everyone, and that's okay. We're here to help everyone that can't stand the thought of looking or doing another filing. Too often, this stuff falls on the plates of an overworked admin or a team member who already has a full time job. It can be a little thankless and a lot tedious. But here's the good news, we're on your side, ready to partner with you to lighten the load and make the process more manageable, dare we say, even enjoyable. We handle the details so your team can get back to the work that they actually care about. Accountants and attorneys are rock stars in their fields, whether it's navigating complex tax strategies or providing invaluable legal counsel. But let's face it, multi state compliance, that's not exactly their idea of a good time. They'll probably thank you for sparing them the headache of keeping up with regulatory technicalities and letting them focus on what they excel at. And for any accountants or attorneys joining us on today's webinar, first, thank you for being here. If you've ever dreamed of offloading those regulatory tasks in someone you trust, we'd love to chat. We specialize in the nitty gritty, so you can stick to what you know best and enjoy the process a whole lot more. Procrastinating on compliance may not seem like a big deal until you're in the middle of a fire drill. These last minute scrambles often occur at the worst possible times, like right before a major bid or an expansion opportunity. And if something slips through the cracks, the consequences can be severe. They include falling out of good standing or facing licensing issues that can disrupt operations entirely with costly delays. But it's not just the business at risk here. These crises can take a toll on your team. The stress of constant firefighting, especially for employees who already wear too many hats, leads to burnout, frustration, and inefficiency. Proactive compliance management isn't just about avoiding business risks, it's also about fostering a healthy, more sustainable work environment for your team. And now to the strategic partnership advantage. Harbor Compliance delivers unmatched expertise in multi state compliance. From purpose built technology to extensive requirement data and proven multi state expertise, we ensure your compliance needs are handled seamlessly. Through our strategic partnerships with accountants and attorneys, we also provide a comprehensive strategy for your entire organization. By partnering with compliance experts, your organization can avoid a last minute crisis, maintain smooth operations, and ensure uninterrupted growth. Imagine being able to hire that perfect candidate in any state without hesitation, or to confidently bid on projects across jurisdictions, knowing you'll meet all requirements, or to even expand your product offerings to new markets without fear of tax complications. A strategic approach to compliance is not just about avoiding penalties, it's about creating a stable foundation that empowers your business to say yes to opportunities the moment they arrive. When compliance is handled proactively, you're free to focus on what matters most, and that is growing your business. Now, we'd like to open the floor for your questions. Please use the Q&A feature to share any queries, and we'll address as many as time permits. If you'd like to learn more about how we can work together or support your organization, please get in touch. And as I mentioned at the start of the presentation, today's session is eligible for continuing education credit through Earmark. You can use the QR code on your screen now to download the Earmark app. And after the session concludes, we'll email out a quick 5 question quiz. Once you complete the quiz, you'll receive your CPE certificate. So now, if there are any questions, feel free to drop them in the Q&A section. Doesn't look like we have too many questions today. Um, any any questions from anybody that's here currently? Give it another minute here. So we did have a question come through, and that question is the most difficult state. I would say that's one very common thing when working through multi-state compliance is that every state differs, whether it's filing fees, requirements, processing timelines. Every state operates a little bit differently. And I think the most difficult state is going to be dependent on industry. Is there licensing involved? Some states have more stringent licensing requirements for certain regulated industries, while other states don't have any requirements for those industries. Um, there's some states that come up fairly often, such as like Illinois, New York, Nevada might not be more difficult, but there's additional requirements. Has a publication requirement, but it really just depends on how much of that work you're taking on, your familiarity with the filings themselves, and I would say if there are any additional industry requirements associated with that specific state. Any other questions? We'll give it 3 more seconds. So if you have anything else that you want to ask, feel free to add that now. If not, we can move on towards the end of the presentation. Oh, we got one more. Perfect. Well, definitely appreciate everybody's time today. To take the next step in streamlining your compliance process, consider scheduling a consultation or taking advantage of one of our free assessments. Our team is here to help you succeed. As you can see here on the screen, you can scan that QR code for a free compliance score report. Our team typically turns that around pretty quickly, or you can contact us at harborcompliance.com/contact, and our team will get you over to the individual at Harbor Compliance that will best be able to help. It does look like that is all the time that we have for today. Again, appreciate everybody joining us today. Feel free to reach out if you have any questions that we can help with after the presentation. We're happy to help.